Top three things in my notebook this morning. Europe is number one, the Russell 2000 is number two, and the 10-year bond yield, which is reflecting on the Russell 2000's growth message, is number three. So first on Europe, we have two big trade breaks that I want you to focus on this morning. And again, trade break being our immediate term duration. We call that the trade duration. Trade breaks in both the Euro Stoxx 50 and in the DAX, the German DAX. So those lines, which were support, are now resistance. We'll see if they hold or not. But on the Euro Stoxx 50, 32.65 is your line. And then on the DAX, it's 89.99. So 8,999. So those two lines have broken. Whether or not you see follow through in Europe to the downside is left to be seen. Obviously, there are some more issues in terms of European banks that I guess a lot more people didn't think that was going to happen as quickly. But as you know, things happen slowly and then all at once. So the second point would be what happened, which was just that yesterday in the U.S. stock market. The Russell 2000 just got powdered. It was down 1.7% on the day. You know, if all you do is stare at the Dow and quote the Dow in points, I mean, you can get a New York cabbie to do that for you, but at the end of the day, if you throw a little bit of evolution into what you do, what you'll notice is underneath the hood, there was a lot more degradation than what the Dow did. The Dow was down 26 basis points. The Russell 2000 was down 1.7%. Biotech down 2.6%. So again, this is more of the same. The high beta growth message comes unwound fastest, and that's not where we want you to be positioned. We want you to be long bonds or anything that looks like a bond or inflation. Again, slow growth, yield chasing assets, which is a lot of the S&P 500 or the Dow. It's not the Russell 2000. It's certainly not the biotech stock. So again, a friendly reminder there with the Russell 2000 failing at 1208, which is again an important line because that was the March 4th top when these stocks topped last time, which wasn't exactly a friendly catalyst. Finally, the 10-year bond yield completely agrees with what we've been saying throughout the year. It's now July, and we're still the only firm that continues to think that bond yields are going to surprise on the downside, and materially so. So 2.59% on the 10-year bond yield tells you what? U.S. growth slowing. Why? Because inflation accelerating slows growth. You know that. Walmart's saying it this morning, the NFIB Small Business Index survey, whether you look at sales expectations or business conditions, is saying that. The stocks are saying that on the small cap domestic consumer side. Again and again and again, 10-year bond yields reflect the economy much more than the U.S. stock market does. And for that, I think that's one of your top three things today.